1 2. Okay, so hello YouTube, welcome back. This is a price action review of Bitcoin. Last week we had last week or this week, today is Sunday, so last week we had Trump speaking and about tariffs and China, and we had this happening, and this has caused massive havoc in the crypto world. And this is Bitcoin, Bitcoin USD. So this is just a review of price action based off the weekly time frame. Starting off from the weekly time frame, you can see we had a fair value gap here, and then price going up, retracing into the fair value gap, and then up we go. Prior to this drop into this fair value gap, we had this last up close candle before a series of down close candles. So this is a weekly breaker block, right? Weekly breaker block. So with that in mind, I want us to check how we would have engaged in this opportunity or a trading opportunity at this point. So you'll notice we had price come up and then drop into this breaker block and come up. So we had these swing highs, and now our target is to have these swing highs swept and price coming off from this breaker block. With that in mind, we have these two engulfing candles coming off from this weekly breaker block, and these two candles will give us something we will call a dealing range, like that. So the goal was to participate in this trade when price retraces into the discount zone of this dealing range, and then buy it and target this swing high right here, or these highs here. And that was just prior to the week that Trump spoke, right? So this is a typical example of internal range liquidity to external range liquidity. We want to ride on price as it goes up. Now, where are we going to engage price? At this point right here, when price retraces into the discount zone of this dealing range. And now we want to see how we would have done that. So this is the weekly chart. We got the daily chart and we look at what was the last down close candle before move to the upside, and this candle right here is the one you want to have a look at, right? So this candle right here is the one we want to have a look at, but you're going to mark the wick to body area or zone so that it helps us know where we can engage. And right here is what we have, the daily time frame. Now in this time frame, this is what we call one candle change in state of delivery. Yes, so this is courtesy of my forex mentor, Dr. White. So how do we engage this? We drop to the lower time frame and now refine this entry further, because this is from a weekly time frame. You might just want to get an entry at this point. So you have this one candle change in state of delivery in the daily time frame. We want to check what price is doing at this point and see how we can engage. So looking right on the left, looking on the left side, we have an inverted fair value gap here, and we have price coming to this fair value gap. This is now we are refining this entry further to something we would want to engage in, right? So fair value gap, price drops into this 4-hour fair value gap. Now this is now a 4-hour fair value gap. Oops. Anyway, so let's just redraw it. So this inverted fair value gap for our IFVG. Sorry, so we have price dropping into this 4-hour inverted fair value gap, and then we have a bearish candle, a bullish candle that engulfs it, and now this is a bullish engulfing candle. I want to engage at this price point, right? You want to see how you can engage. This engulfing candle gives us a dealing range. It's just a repetition of what we did in the weekly time frame, and at this point you can see we have that, but at this point I'll not really try to break lower into the 1 hour time frame. You can see price was giving us a very nasty behavior, a very long time of ranging before it broke out to the upside. So the idea is we want to get into this trade in the 4 hour time frame when price comes back to the discount zone of this dealing range, and here we place our buy entry at the 50%. Price goes up 50% at this candle, stop loss just below this swing low right here, and then you want to target the highs that we had marked in the weekly time frame. And that is because in this range we are targeting these highs right here, right? So, and now with that you have close to 20 R risk to reward ratio. So that is how you would have engaged this trade. And this is a trade you would have held for 9 days. This is September Friday 26th to October Saturday 4th of October on Saturday. So that is how you would have engaged in this price. And now in the new week we had Trump speaking, and it caused this massive dump to the lower side. And if you are an Alican dealing range trader, you would have known this was a prime opportunity actually to sell, because we have this high swept and we have a change in state of delivery happening right, and this is just the 4 hour time frame. Change in state of delivery, and we have price coming to this fair value gap with failures to close above it and then drop, right? Even with that, you can still apply the same logic of dealing ranges. We have price coming to it and then coming lower and giving us an engulfing candle to the lower side. This is the dealing range right here, this candle right here, and then you have price now coming to the 50% of this dealing range, or the discount of this dealing range. Stop loss above this swing high, and you want to target the recent swing lows just like that. And this is how you would have participated in the Trump speech trading opportunity, and this is just Bitcoin. So that is the review in the 4 hour time frame. I haven't gone to the lower time frame to refine the entry. Maybe you would have gotten a better entry in the lower time frame, but that is how actually you would have participated in this price action and found profitability in it. So that is it. Have a look at it, see if it applies to you, if it works out or not. And yeah, also let's engage. You can like this video, you can share, and also share your thoughts and opinions in the comment section. That's it. Bye bye till next time.